Hey everyone, hope you're doing well. I wanted to make a video on a lot of the speculation with crises, recessions, the speculation of the student loan debt bubble we're in, speculation of an auto loan bubble we're in, but more importantly, um, kind of what Janet Yellen, the Fed chair, said recently at a conference. Now, typically, when I think of, like the Federal Reserve Chair, high level positions like that, I don't think of them as necessarily being correct in what they say. I think of them as being a salesman because they don't want to come out saying we're in a crisis and then panic the economy, obviously. They want to come out and say everything's fine, no need to panic, keep spending your money, keep going to work every day, keep paying your bills, everything's fine, right? I'm not really going to tell you the truth. But in this video, I'll kind of show you like a little history lesson of not that long ago, like less than a decade ago, very similar circumstances, not in terms of housing prices, but just an excessive debt crisis that we're in, like I said, with student loan and auto loans being the main two, and how they can have effect on the economy. Now, everyone says the potential next recession is going to be way worse. So obviously, the higher we go, the farther we can fall. Me personally, I think because we've already had the major crisis with the housing bubble, and you have a lot of people and I talk to fairly regularly, that kind of just say, I'm waiting for the next crisis and blah blah blah. So it's still fresh in some people's mind, but they think it's going to be houses that are going to collapse. The reality is, it's going to be like if you're a parent, like your children, your millennial children, I guess you could say, no longer able to pay their $40,000 college loan. They're not going to be able to pay their $10, $20, $30,000 car loan. It's going to be smaller loans, but because there's so many of them and so many individuals affected by it versus people owning homes, it's going to be a bigger stress on the economy that way. But let's watch this video and kind of give you an idea what I'm talking about of what Fed was saying, or Janet Yellen was saying, not that long, or like a few weeks ago.
I think the system is much safer and much sounder. As I mentioned, we're doing a lot more to try to look for financial stability risks that may not be immediately apparent, but to look in corners of the financial system that are not subject to regulation outside those areas in order to try to detect threats to financial stability that may be emerging. So would I say there will never, ever be another financial crisis? Probably that would be going too far, but I do think we're much safer, and I hope that it will not be in our lifetimes, and I don't believe it will be.
All right. So basically saying, no, there's not going to be a crisis. Obviously, there's going to be a crisis. The question isn't if, the question is when. But like I said, when they come out and they talk, they don't want to tell you these things. They don't want to scare people, which again, I totally understand. If you're the CEO of a company, you don't want to come out in front of your entire business and say, we're hemorrhaging money, we're losing customers, we're going down in flames. People are going to panic, they're going to freak out. What they're going to do is protect the top executives and shareholders first, and then they're going to throw the employees under the bus. That's not, in a sense, like it's wrong, but it's not impractical. It's exactly what you would do, exactly what probably most people would do. They want to protect their assets first. Now, that's Janet Yellen, this year, talking about a pending crisis coming up that a lot of economists think is going to happen. Now, we also have a video of Ben Bernanke prior to 2008 housing bubble and what he thinks is going to happen in his outlook. And you'll kind of notice it's a similar tone of voice. It's talking about how he's asked directly about a a potential pending crisis, and he's going to give his answer, and he's going to basically say that he doesn't think there's a problem. But obviously, history shows that there was a problem. And again, the whole reason why I'm kind of showing this is so we learn from our history and we take these things into account, not to make us run out of the market, not to make us be fearful of it, but to understand it and own it and master it. Be a better financially sound person overall. Be financially independent. Be smart and make sound decisions when it comes to your money. So go ahead and watch this one now.
Ben, there's been a lot of talk about a housing bubble, particularly, from the Fed, from all sorts of different places. Can you give us your view as to whether or not there is a housing bubble out there?
Well, unquestionably, housing prices are up quite a bit. I think it's important to note that fundamentals are also very strong. We've got a growing economy, jobs, incomes. We've got very low mortgage rates. We've got demographics supporting housing growth. We've got restricted supply in some places. So it's certainly understandable that prices would go up some. I don't know whether prices are exactly where they should be, but I think it's fair to say that much of what's happened is supported by the strength of the economy.
Tell me, what is the worst case scenario? So we have so many economists coming on our air and saying, oh, this is a bubble and it's going to burst and this is going to be a real issue for the economy. Some say it could even cause a recession at some point. What is the worst case scenario if, in fact, we were to see prices come down substantially across the country?
Well, I guess I don't buy your premise. It's a pretty unlikely possibility. We've never had a decline in house prices on a nationwide basis. So what I think is more likely is that house prices will slow, maybe stabilize, might slow consumption spending a bit. I don't think it's going to drive the economy too far from its full employment path, though.
So would you agree with Alan Greenspan's comments recently that we've got some areas of the country that are seeing froth, not necessarily a national situation, but certainly froth in some areas?
You can see some types of speculation, investors turning over condos quickly. So those sorts of things you see in some local areas. I'm hopeful that, and I'm confident, in fact, that the bank regulators will pay close attention to the kinds of loans that are being made, making sure that underwriting is done right. But I do think that this is mostly a localized problem and not something that's going to affect the national economy.
This scenario envisions that consumer spending, supported by rising incomes and the recent decline in energy prices, will continue to grow near its trend rate, and that the drag on the economy from the most housing sectors will gradually diminish. The motor vehicle sector may already be showing signs of strengthening. After having cut production significantly in recent months in response to the rise in the inventory of unsold vehicles, automakers appear to have boosted the assembly rate a bit in November, and they have scheduled further increases for December. The effects of the housing correction on real economic activity are likely to persist into next year, as I've already noted. But the rate of decline in home construction should slow as the inventory of unsold new homes is gradually worked down.
There's plenty of liquidity out there. He said he did not sense a lack of liquidity in the market. And he said we're monitoring the markets, but didn't really make any conclusions. So he went as far as he had to go, but not further.
He also calmed the fears about the subprime market, which were rippling through Wall Street yesterday, and said we're taking a look at it, but right now it doesn't seem to be an issue, but we're watching it, certainly.
Yeah, that's exactly right. So let's first take a listen to what Ben Bernanke had to say about the economy.
So we expect moderate growth going forward. We believe that if the housing sector begins to stabilize, and if some of the inventory corrections that are still going on in manufacturing begin to be completed, that there's a reasonable possibility that we'll see some strengthening of the economy sometime during the middle of the year.
He went on to talk about the subprime market. Another fear yesterday was that there'd be contagion, but not in the eyes of Ben Bernanke.
Our assessment is that there's not much indication at this point that subprime mortgage issues have spread into the broader mortgage market, which seems to be healthy, and the lending side of that still seems to be healthy. The pace of home sales seems likely to remain sluggish for a time, partly as a result of some tightening in lending standards and the recent increase in mortgage interest rates. Sales should ultimately be supported by growth in income and employment, as well as by mortgage rates that, despite the recent increase, remain fairly low relative to historical norms. However, even if demand stabilizes as we expect, the pace of construction will probably fall somewhat further as builders work down the stocks of unsold new homes. Thus, declines in residential construction will likely continue to weigh on economic growth over coming quarters, although the magnitude of the drag on growth should diminish over time. The global economy continues to be strong. Supported by solid economic growth abroad, U.S. exports should expand further in coming quarters. Overall, the U.S. economy appears likely to expand at a moderate pace over the second half of 2007, with growth then strengthening a bit in 2008 to a rate close to the economy's underlying trend.
Oh, man. So anyway, couldn't help but laugh at some of that. When I watch videos like that, and I kind of look back on how things were, and I try to estimate how they're going to play out in the future, it's hard to judge. Like, everyone wants to judge the specific day, like what day is it going to happen, what month, what year, so on and so forth. I don't really want to waste time on that. I just want to focus on when it happens, how will I be ready, And how I do that, at least, is I focus on what are we concerned about now? What are our major debt concerns? And right now, like I said, it's auto loan bubble, and it's a tuition debt bubble. Now, and again, it's in my opinion, it's mostly going to fall on the millennial generation. Those I think it's like 84 and on, 1984 and on. I think that are considered in that generation. That are gonna get hit hard by it, because they already saw the 2008 crisis and were a part of it, and saw how their parents were affected, and they saw the .com bubble in 2000, and again how they were affected. So they're already two major recessions in. One obviously more extreme than the other, but still two recessions, two major pullbacks, two corrections, however we want to call it. They've already seen the suffrage of that. The economy hasn't recovered. The stock market has recovered, not the economy. And a lot of people don't understand that. They think one is in lockstep with the other. It isn't. One can be affected by the other, but they are not the same thing. The stock market is where the wealthy upper crust 1% house their money to gain more money. The rest of the 99% don't. They're typically consumers. They buy and sell things. Not on the stock market, on Amazon, at stores, at the dealership, so on and so forth. Rich people who do have, let's be honest, have a better financial education, buy and sell on the stock market. They take whatever money they have, instead of buying it on material items, they invest it to grow it. So when they're fearful of a crisis of any kind, especially after ones we've had, they're going to pull their money out, which means there's no money or circulation within the economy. They're going to store it overseas, like Apple does, that has like $200+ billion sitting in a bank somewhere that hasn't been taxed or regulated or anything. So that's pull it out of the economy. They take all their money out of the economy. They're taking it out of the market completely. They're taking it out of the business. They're taking it out of the country. So that's more money that we don't have to basically help people. Now, obviously, I'm not saying we should just give handouts to everybody. I'm not that type of person. I do want to help people, but if I give you a fish every day, that's not helping you. That's only temporarily, giving you a feeling of codependency, because you're waiting for me around whatever times that can bring you that fish. You should be taught how to fish. You should be taught how to fend for yourself. I can help you get to that point, but at some point you're going to have to stand on your own two legs. So when all these guys take away all that support, all that money, there's no way for the rest of consumers, the 99%, to fend for themselves. They have nothing, because wages are stagnant, growth is stagnant, the economy's not going anywhere. So there's no growth. There's nowhere to come up from. So we're going flat. The stock market's like this. As soon as it comes off, starts coming down, the economy's already way down here. It's just going to go down even further into a pit. It's just going to keep digging itself further and further. So when people are concerned, or when they show concern for a collapse in the economy, an overspending with debt and so on and so forth, it doesn't get taken seriously. It just gets looked at, oh, the stock market's fine, so the economy's fine. It's not the same thing. It's not the same thing. But I think, in my opinion, like I said, it's not a matter of if, it's a matter of when. It's going to happen. It's going to happen. It might happen before 2020 because we're out of our, we're overextended on our cycle. We're supposed to have had a major correction by now. There were small corrections, but there wasn't a big correction. And you look at what the stock market was in like 2008, and you can see, we'll do like a, let's see if we can bring up the graph. So if we do a max on here, so you see in 2008 or late 2007, we're about like 1,500 before the debt crisis or the housing crisis, and then in 2000 we're at 1,500 again, and you know, it's kind of like, if I could pretty much draw a line straight across on this. In fact, let's do that. Let's go to stock charts and let's do that just to give people a better idea. Although, actually, you know what, I can only go back 5 years, so we'll scratch that. We'll just stick with this chart. But basically, you could draw a line from peak to peak, 1561 to 1527, and then major correction, and then even bigger correction. And then we're on this huge run-up where we had kind of a peak right here where probably there should have been a correction, because this is about 8 years out, 7, 8 years out, where this one also was 7, 8 years out. It dipped down a little bit, and then it continued upward. So we're kind of past our correction phase. You know, we keep going up, and we're more than double of where we should be. We're 1,000. Yeah, we're like 2,000 over, but or 1,000 over. Sorry, but we're at the point where if something major does happen, if this auto loan bubble collapse happens, if this student debt bubble collapse happens, you know, there goes the stock market, and by extension, you know, those wealthy elites who've been invested a long time and understand this, they're gonna do what they always do: pull the money out of the market, pull the money out of the companies, pull the money out of the country, put it in a bank somewhere else where it's protected, and then the economy starves. We starve because of it, because we don't have wages, we don't have jobs, we don't have anything. And you know, you always have those on the upper end of the spectrum, you know, that put blame on the lower end, and then vice versa, the lower end put blame on the upper end. And me personally, like, I blame everyone who doesn't take the time to educate themselves. That's the whole reason why I do this YouTube channel, is because I want to try to help people at least understand. And I always say, you don't have to just watch my videos. There's plenty of information out there, and it's for free. It's on YouTube. It's on Google. You can find it. But you have to take the time to learn it. And I'm not saying I'm going to, you know, profit from it or benefit or whatever. I'll suffer in some way too, but you know, I'll be able to catch it probably sooner than most people. I'll be able to protect myself a lot easier than most people because I understand it more and more every day that I do this, and I do this every day. I try to stay consistent, and it worries me because I can only protect myself, and maybe I can help the few thousand people that subscribe to this channel. You know, I can't help the billions of people around the world that are ultimately going to suffer. That's what the last 2008 recession was. It was a global crisis. It wasn't just limited to the United States. It was global. So it's concerning to me. But at the end of the day, you know, it's you got to look out for yourself. You got to take care of your own, take care of your family, take care of just at least those around you. You know, even if you're in a family of like 20 or 30, but you're the only one that invests, you know, talk to your family about it. Say, hey, I'm concerned about this. You know, in the past, less than a decade ago, we had a Great Recession, and less than a decade before that, we had another big recession. And in the late 80s, I forget the exact year, but we had like another Great Recession. The stock market isn't perfect. You know, it isn't this immaculate system. You know, it has problems. It's ran mostly by sentiment and fear, and when something major happens, you know, that's going to cause that fear to people to sell off. So by trying to stay informed and educate as many people as possible and share with this information as many people as possible, even if they don't want to hear it, you know, you don't have to force it on them. You just have to like just kind of bring it up every now and again. Like, I think the stock market's doing great, but the economy sucks. You know, jobs haven't returned, wages haven't increased since like the 70s. Like, I've seen multiple case studies, heard from multiple economists, seen wage graphs and everything, and there was like almost like a peak, like in the 70s area, where wages and growth of business were relatively the same. And then it came to a point after that where wages just kind of planed off, and then company growth just kept going. So it got to a point that even before my generation, like, you know, because I was born in like mid 80s, so the generation before, like 70s and stuff, like already started coming off of that, like 16-year-olds, 18-year-olds, whatever, they already start coming off of that rise and see that their wages aren't going anywhere. So this has been happening for a while. This is why you see politicians push for that $15 an hour increase, which in theory is a good idea, but the problem is you're going from such a low minimum wage to a higher minimum wage in an instant. You're trying to make up for those multiple decades that there were wage stagflation, and you're trying to do it in a matter of minutes. You know, it's not gonna work out the way they want. You know, companies are gonna freak out and they're gonna end up firing people or relocating jobs, whatever. There was supposed to be increased wage inflation along with growth inflation of businesses, but the problem is there wasn't. And you know, the previous generations are to blame for that. You know, my generation now is to blame for not doing anything. The generation after me is going to be to blame for not doing anything. You know, at some point people got to stand up and fight, but you know, how you go about it is completely on you. But the way I do it is, you know, I make this channel, and you know, if people want to watch and try to learn a little bit, cool. If they don't, I'm not gonna, you know, be mad at you. You make your own decision. Most of you are grown that watch this channel, you know, so I'm not trying to hold you to anything. But I do say multiple times, you know, always educate yourself, always watch other videos, subscribe to other channels that also focus on the stock market and the economy, and try to learn. You know, try to protect yourself. At the very least, protect yourself. So I just wanted to make this video just kind of my opinion of the global crises, past and present and soon to come, and kind of just state why, you know, stuff like this happens. It's because we don't learn from history. We don't change anything. We don't make any progress and trying to make more equality amongst people. You just care about profit. At the end of the day, it's always about profit. It doesn't matter. It's not about individual growth and development. It's about the ones and zeros. It's about the bottom line. And the problem is that doesn't work. It doesn't work. It's not how you build an economy. That's how you build a business. My country is not a business. No one's country is a business. You are an economy of people, buyers and sellers, supply and demand. You know, we're global now. We're interconnected between multiple countries. It's no longer a single stock market or a single trade deal. You know, it's everywhere. It's everything. And we have to be cognizant of that at all times, but we have to understand that if another country fails and they're a big trade partner with us, that's going to be a direct failure on us, because we're going to suffer for it too. Just like if our country fails and other countries do business with us, they're going to suffer for it as well, you know? So we always want to think about that. And right now, as far as the United States is concerned, and like, for instance, like Canada, I think is going through like a bit of a housing kind of bubble right now. Don't quote me on that. Like, I don't go too much into their economics, but it's something I've been hearing about more and more. And Canada's a big trade deal partner with us. What if their housing situation collapses? We're going to get affected. You know, it's not our country, but we're going to get affected by it. Same thing if we have this auto loan bubble or this student loan bubble, Canada's going to suffer. They're not our country, but because they're a major trade partner, they're going to suffer for it, you know? So it's global now. So that's one reason why I watch all this stuff, and I try to watch multiple news channels from multiple countries, and I try to follow all this, because if just one major bad thing happens, like Brexit, like I remember the stock market dipped when the Brexit vote happened. Everybody freaked out. The market didn't collapse, but there was like a correction on it, you know? It's just the fear and the sentiment. People are watching those things. The big money is watching those things. They're waiting for that fire sale sign where it's all bad and they need to get their money out quickly and go hide it somewhere, and then just watch the rest of the economy in the country just die and starve and just suffer. They don't care. They just want to protect their bottom line, their money. So what I'm telling you all is really do the same thing. Protect your bottom line, protect your money, protect your family, protect yourself. You know, that's really, I don't know how else to put it, you know. don't sit there waiting for all the good things that I'm saying to happen, where the country should care about you and fight for you, do all this, because it's not. Like, let's be real, it's not. There's not many countries out there that do so much for their citizens, you know. And despite what you may feel as an American, me personally, I'm not proud of some of the things we do and how we spend our money and what we tax people on and what those tax dollars actually go to. You know, I think we can definitely improve on some of that stuff, but who am I to make that change or try to improve that? All I could do is recognize that there's a problem and, you know, try to find a way to protect myself. That's really all I can do. And that's what I try to do. And that's what I try to do for people that watch this channel, to say, hey, you know, always keep an eye out, you know, protect your bottom line, you know, get involved. Don't try to change the world, just try to change yourself. That's really it. So anyway, this video is going to be really long, and I apologize, but I just wanted to give my 2 cents on all that. And as always, if you all have questions on any of this or anything, you know, just always leave me a comment, and I'll do my best to answer it. If you like this channel, as always, if you want to support me, click like, subscribe, help me out. If you want to share this video, get the message out there. If you know someone that might be interested, do that. And, you know, I wish everybody the best of luck. Like I said, I'm not saying all this bad news is going to happen today, tomorrow, a year from now, 5 years from now, who knows. But it's not if, it's when. One day it's going to happen. And the question is, are you going to be ready? You know, because I'm going to do everything I can to get ready. So, anyways, hope you had a good weekend, and hope you have a good rest of the week.